guys, this is Manoj Maheshwari from Market Ideas for Profit. Today is the early morning of the 30th of March 2023, and today's subject is an explanation as to the pre-plan that I release on my Telegram channel and how I would want subscribers utilize the plan and how you can make money out of the plan. Currently the plan is available for free and it's being distributed on Twitter and Telegram on a daily basis. The plan is released early morning before the market starts and is meant to sit and forget kind of trading, where once you set up a plan, it gets executed, or it executed once the level is reached, or it will get stopped out if the trade goes against you, and the best outcome is that it will reach its ultimate destination, or we need to close the trade at 3:10 p.m. as the case may be, if the targets are short and not reached but we are still in the margin. So this is how the trade plan works. To give you an idea, to start with, this is the trading view chart of the Nifty for the 29th morning pre-session. I'll take you to my Telegram channel. This is the Telegram channel, and this is the template how I release my plans. The Market Ideas Premium is the plan that we're looking at, and what we are going to do is we are going to look at, these are the releases that we make. So on the March 29th, 3:38 a.m. last night, this plan was released. This is the Nifty chart. If you see, this is the Nifty chart and this is how it is shown. This is pre-market. I will give you two resistance levels and two support levels. S1, S2 are the support levels, R1, R2 are the resistance levels, and this is how the plan will look. To give you a more perspective on the plan, this is how the March 29th plan looks. It will give you, these are future levels. So this is a Nifty futures current month's chart. I will give you the remarks for the last session as to how it panned out. I'll give you the R1, R2, S1, S2 levels. I will give you an idea of what the open interest max pain on the weekly chain is. Today was the expiry of the current weekly chain and the expected max pain was at 17,050. Given what activity the FIIs have reported on the previous day, I will report what is the outcome of all the activity that happened during the day on the OI change by the FIIs, and I'll give you my analysis for the day, my analysis based on all the indications and mainly the FII activity and the OI change and the OI current status. Then I'll give you the statistics of all the strike prices which are relevant and what has happened on those strike prices. So you will have the strike price, what is the quantity that is there currently open, second strike price, what is the current quantity open, what happened during the last trading session, what was the OI, what was the maximum OI increase, what is the second maximum OI increase, what was the maximum decline in OI on the call side. So 17,450 was the maximum decline, 17,400 was the next maximum decline. Again, same so on the put side, we will get the same details. And here is the most important information on this plan. So the trade setup will be, if the Nifty crosses 16,990, we will aim for 17,126 and 17,208. So now let's see how this will be represented on the screen. 16,990. So let's go on the screen. So here what I will do is I'll mark 16,990 with a line. This is the chart which is after the indication has happened. So if we want to go to how it was before the day started. I will take it to this level where it was. So this is how the chart looked before the day started. This is the 515 candle, and this is how the chart looked before the day started. What I would do is I would mark this, and I would create it will not allow me to create an alert here, but I would create an alert here at 16,990, and that would give me the indication as to what I want. When this level is crossed, the system will prompt me that the level has been crossed. So let's go back and see what's happening on our plan. So our plan says that once the price goes over 16,990, we need to aim long, so we need to buy, and our targets would be 17,126 and 17,208. And if the Nifty decides to go down below 16,930, we should aim short for 16,866 and lower. So my second call will be 16,930, which will be somewhere around this level. So in other sense, what I'm trying to say is, if this support is broken, my next move should second support line. So if this support gets broken, the journey of the price could lead us to another level, to 16,869. Now let's see how the day transpired. So to make things a little more clear, we are going to switch to a 5-minute chart, and this is how the 5-minute chart looks for the day. And let's start the bar replay to see how the day progressed. So if you see, there was a rise in Nifty right from the beginning. So right in the first candle, this was the 915 candle, we crossed the 16,990 mark, and that's where our initial trade buy should have started. So the moment it crossed 16,990, I would start my trade. Now there's a question that one could ask is, what is the stop loss that I would take? Normally I would suggest a stop loss of 50% of what my target is. So if my target range was from 16,990 to the first target was 132 points, I would take a stop loss of roughly about 65 points and run my trade. But as a matter of normal understanding, since I have a support S1, I would consider that as my stop loss for the day. So if you see, our initial stage is 16,990 and our current first support is at 16,937. So I would give it a wriggle room of 10 points, and 16,925 to 20 would be my stop loss, because I would expect even if the market would come down from 16,990 level, it should take support from the support that we have already mentioned on the day and could go higher again. So let's continue. So we have already made a buy at 16,990 right on the first bar of 15 p.m. at 9:50, and now let's see how the market proceeding through the day. So these are 5-minute candles, and we're seeing that the market is rising, and here I would see, at this point I would see that I have already traveled from 19,990 to 17,058. So that's more than a 50-point rise, 60-point rise that I have seen. Now normally when I get into a trade, I would take 4 lots of Nifty. That would be my position size. It could be 2 lots, it could be 4 lots, depending on how I see the particular day. And I would position size by 50% when I've reached 50% of my trading goal. So if I have got 4 lots of Nifty, that means 200 points. I would get out with 100 points, that is 2 lots of Nifty at 17,055, to book my partial profits, and then I would trail my stops to somewhere just below the first candle preceding the entry candle, and that would become my stop loss. So I have already booked 100 points for the day, and I have brought my stop loss higher, as the market has already given me some range to go with. Now let's see what happens in the next part of the session. So as we proceed, we see some retracement, and we see that the price has fallen down, and we seem to have lost our stop loss. So that's how our first profit has been taken out, and the second entry has gone away, and we have faced a stop loss. So now we are 100 points plus and at net zero for the day. Now the plan says that I should cross, if the price goes above 16,990, I should be buying. So that was the first phase of my entry. What I would do normally is expecting that this support will be taken and we should get a rise, and if that rise again crosses back into 16,990, we can go long again. That would be my plan. So I would put in a stop limit order in the system, where the moment the Nifty crosses 16,990 again, we would then again get into a trade and plan to get to the first resistance according to the day plan. So let's see how it goes. So you see here that the market took a U-turn precisely at the point that I had marked in my pre-day analysis, which was the support, and we have crossed 16,990 on this candle. So if you see, we have crossed 16,990 on this particular candle, which is at 1310, and that's where I would get into a trade. This is the at 1315 is that's where I will again get into a trade, and by the two lots that I got stopped out with, I would not go with the entire 4 lots. I'll go with the 2 lots that I got stopped out with and hope to do better. Now there are 2 ways to go about it. You could either buy it at just when the price is crossed, or at times as a confirmation trade, you would wait for the price to go up and retest that level that you have sent and wait for some sustenance and buy as soon as you see a bounce. So a safe trader would wait for the retest and then buy it, and an aggressive trader, depending on the mindset on that particular day or as per your trading plan, the moment the level crossed again, you could enter the trade again. Now let's see how this proceeded for the day. So if you see that we did take a bounce from that level again, and we have risen again and again. There's a retest of the same level. Now here I would have my stop loss as the support. S1 would be my support, would be my stop loss. So if you see, we have achieved 100 points in our first run with the 2 lots, and in the second run we have taken away a further 2 lots. At 310 I would close my trade, and at 310 approximately I got 100 points more on 2 lots. So that means I got 100 points on my first 2 lots of 50 points, 60 points actually, 120 on my first trade, and I got 200 points on my next trade. So that would mean that I would make 60 points on 2 lots. That's 120 points, and 100 points on 2 lots. That's 200 points. A total of 320 points for the day on Nifty, which is a cool 32,000 in the bank. So if you realize, this was not too hard to achieve, and all it required was just following the plan. And if you realize, if you see the strength of my predictions, one, the 16,990 level was so crucial that it got crossed in the first instance. It gave us the 100 points, and then when it bounced back again, it wavered around that period. Because there was an expiry day, there was a huge volatility, but it went down. It didn't go to our initial stop loss. It didn't reach our initial stop loss, even if we had not squared it at cost and trailed our stop loss. And it gave us an opportunity. It gave us a beautiful bounce from exactly the level that was given in the pre-market session, pre-market plan, and it bounced back from there, and it gave us a beautiful run, which gave us the 100 points eventually. Now there would be one more way to, this is a plan which I gave pre-market. If someone understands price action and would trust the system, I would go long on the support. Once the support was touched and the bounce was seen from the support, one could have initiated the trade at 16,950 or maybe 16,940 was the support, maybe at 16,950, and that would have easily given away close to 145 points for the day. Just even if you were not to, follow the trading plan that was given in the pre-day release, even if you were to follow just the support and resistance levels, it would have points on the trot on the Nifty today. So this is the strength of the analysis that I present every morning on my channel. This is the channel which is called the Market Ideas for Profit. I know you might not be seeing the entire screen, but this is the channel, and these are the releases that I make on the day. This is a YouTube short video which gives you the trade plan for the day. We could play it here and you could see how it is. This is a short video which plays out and gives, this is actually a short YouTube short, and this tells us the report of the 27th of March, actually 28th actually. It's giving you the chart levels for the 29th of March. If you don't look at the Telegram channel, you can just subscribe to the channel and you will get the short list. And here's, if you see, here's the plan for the 29th of May, 29th of March, above 16,990. So somebody who doesn't look at charts and just wants to follow the numbers, this is a very simple way of communicating my plan. You can just follow this plan and make money. So this is for Nifty. If the price crosses 16,990, you aim for 17,126 or 17,208. If the price goes below 16,930, you short it and you aim for 16,866. Let's continue. This is the plan for the Nifty, and then I will also have a plan release for BankNifty. This is the BankNifty chart for the 29th of March. This is a 1-minute video which will give you all the explanation. So if you see, this is the trade plan for the 29th of March. BankNifty above 39,660, aim for 39,827. Below 39,560, aim for 39,269 and 38,825. This is the plan. So now let's look at how you would see how we would do on the BankNifty. So let's open BankNifty for the moment and see how the BankNifty performed for us through the day. So what I'm going to do is I'm going to open BankNifty here. This is my BankNifty chart, and let's go to the 30-minute chart, and this is how the BankNifty looked today. The plan was that this would be my levels. This would be my support and this would be my resistance levels. Now this is a band of resistance. This cannot be the exact point. This is an area, this is a zone. So this is where our day started. Let's look at the 5-minute, and this is where our day started. This is the day separator. So we went up in the morning, we reached the resistance points, and if you see through the day we have been just around that resistance point. Now let's look at the plan of the Bank Nifty and see how it worked. So let's go to the Bank Nifty. This is the Bank Nifty plan. I'm sorry, but I'm not able to get this here. Let me just try again. What am I trying to do here? It's not allowing me to do anything. Okay, let me see. Market ideas of profit, premium, and this is the Bank Nifty plan for the day. And this is your plan. See how it looks like. So I've mentioned all the levels. Opened higher, sideways to positive outlook for the day is my assessment for the day, like I told you. Now here I've given trade setup is 39,660, aim for 39,827. So it didn't go lower, so let's disregard the short trade setup today and let's look at 39,660, aiming for 39,827. 39,660, aiming for 39. Where is 39,660? So 39,660 will be here. 39,660. So if you notice, 39,660 is exactly around this level. I'm sorry, this is this is 39,660. So if you see that according to my plan, we mentioned that above 39,660, aim for 39,827 is the first target that I've set up. And what are we getting here? What are we getting here? 39,660 was tagged right in the beginning of the day. This was your beginning of the day. It was tagged here, 39,660, and as we took support here, we could have bought it right here. I would have bought it right here, and I would have aimed for 826, 844 in the first instance. That would have given me 120 points. Again, I would have bought it at this support and released it for another 823, so that's another 152 points, and then the third time again, so that's another 100 about 150 points again. So you got 100 points, 150 points, and again 150 points. So what you got here today was 100 plus 150 plus 150. And if it was a two lot position size, you got 200 points, 300 points, and 300 points again. So let's add up. You got two lots into 100 is 200 points. Two lots into 150, that's 300 points, and two lots into 150 is another 300 points. A total of 700 points. 700 points for the day, when the price of the underlying has not even moved the entire range. If you want to see the price range, the entire price range has been not more than at the peak, not more than 280 points. Now I would set you a target for 39,820 whatever, but I would actually not sell there. I would still let it carry on and I would still get more points on this trade. But this is the bare minimum that you would make. So 700 points on Bank Nifty. So that's, you can just imagine what is the amount of money that you're making. 700 points on Bank Nifty. Add to what you made on Nifty, and it's even if you do it one lot, you should make more than 15,000-20,000 rupees a day. How good is that, guys? This is the way you can use the plan and make money. There is a subscription cost to the premium channel, and I will release the plan in the comment box so that you can subscribe to the channel. But that is if you want access to the detailed chart and the plans and all this data. There's another channel. Now I'll give you some more idea. What happened during the day was that at around 12:15 noon. So let's go to this 12:15 noon, and the post says the deltas are positive and the markets are declined. So something is brewing in the data. Avoid shorts from here for the moment. Now what I'm trying to convey here is there's a delta matrix that I see on the order flow charts, and we are seeing a positive delta, but the price is going down. So there's a divergence on the price action where the buying in the market is there, but the prices have gone down. So this is a divergence which is giving us a cue that the fall in the prices is not supported by the delta data that we get on the system. So this gave me an idea that we should avoid shorts. Now there was no clear signal to buy at that point of time, because I don't want my subscribers to buy aggressively. They have their own ways of buying, but what I'm trying to do here is I'm trying to tell them, give them an idea as to we should be avoiding shorts from here for the moment. And that's exactly how it panned out. If you see, this was at 12:15, and if you see, this is the 12:15 candle. So we are at the base and at support, and I got an indication here that the deltas were strong and the prices were down, but the deltas were strong. Now given that there was a fall, somebody could have initiated a short here expecting the price to move down and go to the next support level, but as indicated, I had a support in place, plus the deltas are giving me the indication that we should not look for shorts at the moment. So I hinted on my channel that any shorts should be avoided at that point of time, and that's exactly how you see what transpired. If you see that right from that end, we just went up, kept going up through the day till the end of the day, and we ended up making 150 points from that point. So that would have been on two lots a crazy 300 point run, cumulative 300 point run from that point, and that would be 30,000 rupees if you would have stuck to the entire length of the move. There's one more metric that I use, and I will like to show you that. This video is going a little longer than, but there was one more metric that I would like to show you, and what gave me a cue today that prompted me to send that message at 12:15. So let's go and look at this. So this is a go charting tool, and what you see here is an order flow chart. Now an order flow is a tool that gives me more information on what's happening in the market. It's a different subject, but I mean it's not the agenda for this particular video. But what I saw here was on this particular bar at 11:25, there was a huge amount of buying that took place in this particular bar. At a point there were 340 lots that were bought, 342,000 lots. 34, it was 342. So that's like a huge amount of volume in Nifty being bought at that particular price. This was at 11:25, and at 12:15 we saw a reversal. So I realized that there was a lot of buying happening, and there was a sudden jump from 193 cumulative delta to 536 cumulative delta in this particular bar, and there was something brewing in the markets which was telling me that the shorts are not going to work. So that was the reason, that signal that came to me, and I indicated on my channel that we should not be going short. And then if you see, the start of the reversals began to happen around this area from 1205 to 1230. In this half an hour period, there was accumulation around the support, and once the accumulation was completed by whoever wanted to create the trade, they accumulated a lot of long puts, long calls, or maybe futures, and they added their positions here, and then it kept on going up and up and up through the entire period, taking support again here, and the last half an hour just took it away and closed at the highest point in the day. So guys, these are the two things that I use to make my trading smooth and give me intraday signals. I have a course that helps understand this very way of calculating how you can understand. There's so much data on this chart, and you need to analyze all this data and find out how you need to move on the market. So there are a lot of numbers here. This is called the auto flow chart. These are the delta bars. And this is the footprint matrix that give me data as to what's happening in the market. This is all real-time data that gets developed in the market. This is a part of a course that I have, and if you want to learn the course, you can get in touch with me and I can help you understand how the order flow works. This, in combination with a few other tools, helped me to analyze the market. The other tool that I use to analyze the market is the volume profile. So I use volume profile to get my support and resistance levels. So if you see, this is the volume profile. What you see here is the volume per bar. What you see here is the volume histogram per price at a particular price. What has happened? So when the volume happens at a particular price, the highest price at which the maximum volume happens is called the point of control, and these point of controls act as support and resistances. So if you see, whenever the markets travel to this point of control where the maximum volume happened, the number of buyers in this location forced the market higher, because they were when it came here, they accumulated here and the market went up. And when the prices came back to this level, because these guys were sitting here and they were wanting to defend that level there, they again pumped in some more buying here, and the prices again the prices went up from here. So this volume profile is also a part of a course where I explain how to use the volume profile. These are the tools that I use to analyze the market and give me my signals. Now again, if you want to see here, you would see a similar story on the Nifty. That was the BankNifty. I would again use the volume profile here and see how it goes, and see how the volume profile worked here again. The volumes were highest at this point of time, and when the markets went down, when they returned back and crossed this volume highest point of control, that's when the market again bounced off from this level, because the volumes are very high on these levels. So these three four tools help me to analyze the market, give me the structure, and that's how I trade the markets and try to make money every day. The various supports and resistance that you see are also derived from the same study, which is the volume profile. I use the volume profile and get my support and resistance levels using a little bit of price action too, and these work beautifully, because if you understand, volume is a major factor and gives you the idea as to where the maximum number of trades have happened in a particular period, and that tells us who are the people who will defend, because the markets are supported and moved by the institutions, and the guys who make the maximum number of trades are the guys who have the maximum knowledge and have the maximum influence on the market. So if you can identify levels at which these people are inserting their trades or getting out from their trades, it's valuable information that can be utilized to just piggy bank on what they're doing. So it's like a wave that they create, and we surf on that wave and make money for ourselves. So guys, I hope the video has gone long. I hope you enjoyed this video, and if you want to know more about how I work on these things and how I get my resistance levels and how I use the intraday techniques that I have and make money from them every day, you can get in touch with me in the comment sections, and I can lead you on to a course which is chargeable, of course, but it's a comprehensive set of videos that will give you an insight as to how I strategize and use the information to my advantage and make money from the markets. You can also subscribe to the channel here. Currently the annual subscription, I will release the annual subscription plans in the details in the comment section, in the description section of this video, and you can easily subscribe to the channel. Once you make the payment, you will be given a link to add to the channel. You can add to the channel and you will be privy to this information, which will help you make money from the markets. Guys, thank you for giving all your time. I hope this video was valuable and it gives you an insight as to how you can make money from the markets using the simplest of analysis. I would not want to complicate matters, so it's the easiest way of making money. If you can just follow levels and follow the plan that I've taken and make money, and in the meanwhile you can also invest in your learning and you can learn how these levels are derived, and then you can proceed to use these levels on whatever asset class you want to use. That's it for today. Until we meet in the next video, thanks for giving your time on this video, and do subscribe to this channel and share your comments and like. And if you feel that this information can help you, help your trading and make money for you, do subscribe to the channel. Thank you.